So the question now goes on to say that they'll pay tax at 20% on profits in that country, which we've done. However, it will be exempt from any tax in the first 2 years. Yeah, we've done that. All post-tax cash flows remitted to P, which is what we've just worked out, we've exchanged it into Martech, they will pay tax on those at a rate of 30%. However, there is a bilateral treaty that says, under its terms, they'll be assumed to have paid 20% already. So they just need to pay an extra 10%, okay, on these monies here that's been exchanged. So let's work out that 10% charge then. So the tax in year 1 would be, you would pay tax on the 8,000. So we'd pay 10% tax, wouldn't we? I'm going to put it as minus 10 because it's a cost. So minus 10 times by sales, the costs, yes, the tax allowable depreciation, and we're done. Well, that actually comes to 0. So no tax to be paid. Now, what should we do on year 2? So it's minus 10% times by, remember these are all in E dollars. So that plus that plus that plus that. So 10% on all their taxable profits, isn't it, basically? But all those taxable profits are all in E dollars. So we have to divide it by year 2's rate, 87. Okay, so same thing in year 3, minus 10%. So the additional 10% tax that I'm paying on their profits, which is the sales, less the costs, less the tax allowable depreciation. But all those figures are in E dollars and need translating at the exchange rate in year 3. Done. And then I'll do the same for year 4 then. So minus 10% times by, in brackets, their profits, sales, less the costs, less the tax allowable depreciation. But not forgetting that that's in E dollars, so needs exchanging. Okay, so that's the tax done. And there's nothing else there, so it's just the bits that we missed out, really. So if we go up here, it said we missed out this bit. It said the parent company will achieve a pre-tax contribution of 35% on sales of the component to Elan. So if you remember, so we've got this additional contribution. And if you remember from the first part of this question, we charged 7. Okay, so M dollars of 7. For every unit that's sold, times by 50, and that's already in M dollars, isn't it? So times by 35%, which was the contribution on sales. Okay, and for all of these then, I'm going to make it just one decimal place. No decimal places, I mean. Okay, so the additional contribution here then would be, we made sales of 65 times by 7, but there was inflation, if you remember. So the inflation rate in our country is 1.09 times by 35%. Same here then, it would be 83 times by 7 times by 1.09 times by the exchange rate again. In that year, 1.08 times by 35%. And the same finally then, 90,000. So 90,000 times by 7 times by the inflation rate so far. I don't need to worry about exchange rates because it's already in M dollars. and the final year was 1.07. And that's that. Not forgetting actually the 35%. Okay, now we've got tax to pay. Tax is at 35%. We've got to pay that on everything. So times by minus 30%, sorry, the tax. And just copy that across. Okay, now I think there was just one other thing that happened. It says investment in this new phone will meet the loss of future sales of an existing phone. We're going to lose the pre-tax contribution of 400,000 already in our currency in year one, but will increase by inflation. So, lost contribution. Minus 400. That times 1.09 increased inflation. I'm just remembering the inflation rates now. That times 1.08 inflation, and that was that times 1.07. And then I'm just going to make these all up nice again, so I don't want any decimal points. And I'm done. And therefore I've got a tax benefit as well, haven't I? If I'm losing money, that's good news for me in terms of tax. So I will save that times by 30%. And then once I've done one, copy them all across. Make sure I've just got right so. So I'm done now. I can work out my sums. It's from there, that's in M dollars, from there all the way down to here. And then that line I'm going to have made nice. Then it's just a case of copying them across. Just realised there's a bit of a mistake there. That's coming across as a negative, so just make it a double negative. And we're done.